The following pro the, fo- the, fo- the following program contains views that are not those of WVTC, iNetworks Communications, their subsidiaries, affiliates, or financial supporters.
Hello, hello, hello. It's good to be back on the Mortgage Talker Show. I got a special guest with me, a partner of mine. I'm looking forward to talking to you guys. I hear a little bit of an echo in the background, so I don't know if you guys can fix that. But anyway, so for the purpose of our show is I like to call them 3 Ds. We want to educate you, encourage you, and give you empowerment so you can make a good decision. When you talk about, as far as not a home, when you talk about the American dream of home ownership, so many people find it as a challenge, or they get a little discouraged. It's not the same as buying a car, but we want to give you solid information to be able to help you do that. And I got a special guest that works closely with me, Renee Lambert, on the show with me. Renee, how you doing today?
Hey, I'm great. How are you?
I'm good. I'm good. Well, we talk all day, every day. We work really close together with our clients. So today we're going to have some fun. We're going to talk shop. We're going to talk about building wealth. Renee's going to give her spin on some things that we, it works very close together on how we help our clients. But we just kind of want to take you through the process. We're going to give you a little bit of background on Renee, how long she's been in business, go over some programs, some building wealth tools, why it's still a good time for you to buy a home. And then we are going to keep our promise. We're going to have special guest Darius Brooks jump in at the end. He's going to give you guys a little treat, 5 to 10 minute word of the weekend. They'll give us a song as well. So definitely looking forward to that. So Renee, let everybody know where are you from with that Southern charm there.
Well, I think you can probably tell by my accent that I am in the South, and you'd be correct. I am in Alabama. Have been born and raised here, so been here for a very, very long time.
Yeah. And how long have you been in the business, Renee?
This is my 23rd year.
Okay, so we're about to. You got in 01 then? Or,
mm-hmm.
Yep.
Yep.
We got in. I'm just putting that together. I always say I did it for 22 and you get in for 23. No, you probably got in 2000 then. You probably got in a year before me. So, but we both have seen the ups and downs. So who better to talk to you guys about this market? One day we got to have the other part of our team on. Somebody's got to answer the phones while we're doing it. We got to have Maritza jump on here with us as well. But so, and I'm going to jump right into it. When we talk about because I can say it all day. Sometimes you hear a different person talk about it, and it just makes a difference. We talk about the housing state that we're in, and you saw 2008 too, right?
Oh yeah.
You just shared, and I didn't prepare her for this, so I love putting people on the spot, and I'm sure she knows by now.
Yes, you do.
It's fun, right? It's authentic, right? You get when we talk about the difference in '08 and what we're dealing with right now, what comes to mind? What's the first thing come to mind?
Oh goodness. There's so
Only
much.
question, wasn't it?
Yes, no doubt, no doubt. Well, first of all, it was of course very scary because we've never been there, so nobody knew what to do, where to go, how to do it. It was a very trying time without a doubt. Rates went up then, just like now, and people were still buying, but just not as much, and there wasn't that much inventory. And gosh, so many things changed as far as guidelines, the things you can do, the things you can't do. The business really, really changed drastically over the next few years after that.
100% agree with you. But when you think about some of the differences, right? What's happened. And I'm going to tell my friends to share. You guys know the routine. We're on it from on Thursdays from 4 to 5. We're going to give you some really good information. But when you talk about some of the differences, and there's some positive difference, and obviously there's some, I think, some government enforced differences. I think about 2008, where I was in that time. That was I saw my production and income go down 70%, and some of that was we're adjusting and not being prepared for it, and some of it was just a market crash, right? You had a lot of houses on the market back then. I always say, if you hear your parents say sometimes, if we can go back in time knowing what we know now. It's funny, I find myself doing that sometimes and saying, look, man, if I could just go back and buy Fannie Mae stock at a penny, buy houses in 2008, 2009. And I say that just saying it's the best. It's one of the best times to buy right now, because you don't have as much inventory, and rates are higher, which is deterring some buyers from buying, but that also means there's less competition. So
Right.
I'm kind of leading the witness a little bit. So when you talk about what you remember, like, again, we talked about 2008, and I'll share a little bit more of my story too, which I'm sure some have heard me talk about before. But when you talk about right now, what you see and you're dealing with, you see like I see, right? You're just as qualified to talk about this, your license. And let's give Renee a hand. So she passed her national test. She had to take that so she can get licensed in Illinois.
Yay.
So
Thank you.
grateful. We are grateful for her doing that. But when we talk about how, that question I just asked you, what you see right now, what's the benefit of someone maybe buying a home right now?
Well, just, as you mentioned, less than 6 months to a year ago, we would have 10 people bidding on one house, when rates were lower, and it was very, very difficult to win a bid, because there were so many people. There were cash buyers beating everybody out. And now, clearly, as we mentioned, there's not as much inventory. But since rates are up, some people are holding off, which means there's not as much competition. If you go in with a good offer, a good pre-approval letter from us, and confirmation that, your docs are good, your income's been verified, you have a very high chance of winning that bid now because you don't have as much competition. So I think, in my opinion, for that reason, it's definitely, it's a great time to buy. Rates are not where people would like them to be, but my first house 32 years ago with over 700 credit score was 10%.
Jeez.
And you just go with what you have. Yeah, I mean, you just go with what you have.
Yeah, my parents did. But you're right.
Yeah, I mean, you just go with what you got, and rates will eventually at some point come down and you can refinance. I mean, I certainly wouldn't let it prevent me from purchasing a home if it was my goal and what I wanted to do, to start building my wealth and, building a financial portfolio kind of thing. And again, now is as good as any. You may not agree with that because of the rates, but when that time comes, if you, I can only speak for Cherry Creek Guild, if you purchase with us or refinance with us, we waive our lender fees in the future when rates drop. So that's going to
100%.
save you what, $1,500, $2,000 right there to get a better rate as well. So yeah, I just, in my opinion, anytime you want to buy a home is a good time to buy a home, but especially when you don't have to fight 10 or 15 or 20 other people to try to win a bid on every single house you go to.
100% agree. We're going to show a building wealth tool later on in the show. And I'm going to show for some in Illinois and some in Alabama too, because you'll probably have people looking. And I love, we're going to talk about this, but giving people facts and actually seeing it on paper, on the screen, and they're like, oh, wow, I need to do this. It's just looking at the numbers. And that's what that's all about, guys. Having less competition, like Renee just talked about, in this market, you're able to get some. I've seen get seller credits now, and depending on the area, if the area is really booming, you may not get as much seller credit, but they're more so willing to work with you. And you also, and I'm going to come back to so why you want to work with a company like Cherokee Mortgage Division of Guild. We merged in April 2nd. There's a lot of condensing coming around, or you've seen a lot of lenders get out of the business. I mean, I saw a stat we talked about last week when I was in Colorado that over 200,000 loan officers did not renew their licenses. Rates went up. So, we got to talk about rate triggers later on too. It's just, you want to work with someone that's been in the business for a long time. And that includes me and Renee. I mean, Renee's 23 years. I'm 22. I get to say that I get to go 1 year younger than you. So that's awesome. But, and we don't say that to brag and say, oh yeah, we know what we're talking about. We're always learning. We always, Renee researches guidelines.
Yes.
We go to our underwriter. So we, although we're a big company, we're a small team, and you're not going to get treated like a number, like as you would at a bank as well too. So buying a home right now there's a lot of benefits. So we're going to talk about some of the myths or some of the what do I want to say there, Renee? People, why they're deterrent, so why they may not think they can buy. I sent out a video this morning about why. I mean, you can buy a home going conventional with less than 20% down. It amazes me how many calls I get during the week when people think they still got to come up with 20% to buy a home. Or an investment property, again, but not their primary residence. So, that myth was busted a long time ago, but I think, we had some scarcity in 2008 when it came to some of the programs. So, but FHA was booming back then, and a lot of people are taking advantage of it now as well.
Most definitely.
Okay, so we're going to talk and I'm gonna go back on that a little bit as far as that program is concerned. I want to just say hi to a couple of our guests. Cardio, I think that is John, Damon, Trace, whoever else. I know some people ain't sharing the name, but they're looking at the video. But, we saw 7-10 people share the show. We're going to give you some really good information. We're going to tell you about some programs to buy, and we got a special guest coming on in a little bit as well. But, again, Renee's out of Alabama. I'm here in Illinois. We work closely together. It's funny how technology works when we can kind of see each other and do things now. But if anyone has any questions throughout the show, feel free to ask. We're not going to pre-approve you on the show because there's privacy, but we can get close. All right, depending on what your questions are. But we're going to talk a little bit about, I would say some of why people are nervous about buying homes. And the main two things that I get a lot of, and Renee, you can share, is credit and down payment. Do you agree with that, or is there more than that?
Oh, completely. You got it. You hit the nail on the head.
So credit and down payment. So, and we want participation. Like I was speaking to a group yesterday, wonderful agent. I'm gonna shout out to PMR Real Estate Group. That was really cool. I got to engage with them. But I joke and say, listen, I grew up in a black church. I like to get yes and amen. So I need to hear back from you guys. So I want you guys to participate. So when we talk about credit, and I'm gonna leave this open for people to ask. But Renee and I are just gonna have a conversation, just as like it's us two talking here. But we're talking to you guys too. What do you think some of the issues or fear of people that may have challenged credit or may not? I mean, we can talk back and forth and banter back and forth about that, but let's just open that conversation up a little bit.
Okay. Yeah, credit it's scary. I think a lot of people just don't know how to fix it. So they figure if they don't pay attention to it or don't even try to purchase or try to do something, that it won't go away, but they just ignore it because first of all, people get embarrassed, and here's what I tell my people: life happens. It happens to all of us, the best of us. It doesn't matter where you were, what happened. You can always fix it. It might take time and some effort, but it can be fixed. And if you have a goal of purchasing a home, there's no better time than right now to sit with, to talk with me. Let me send you your credit report and give you a plan of action, line by line, including how much you need to save, how to get your credit scores up, and just giving, tips that an average person is not going to know because that's not their forte. They're not supposed to know that. That's what we're here for. But like I said, I run into so many people and they're like, oh my gosh, I had this, I had a divorce and I had a bankruptcy. And I'm like, you're not alone.
Right.
And I think people feel like they are because they just don't know. And I just try to reassure them that, look, you are not alone. Happens to the best of us, but it's something you can get past if you truly want to, but so yes, that and down payment, of course, and that's why it's important that people start preparing the minute they even think they might want to own their own home, because they don't know where to go. They don't know how to plan. They don't know how much they need. They need that guidance from us, to put them on the right track, whether it's in 3 months, 6 months, a year, however long it's going to take them to get where they need to be. Now is definitely the time to start planning that.
Yeah, I'm gonna answer Damon's question in a minute, but I want to dive right back into what you talked about credit before we get into the down payment. Let's go behind the curtain a little bit, and we can talk to clients, we're going to talk to agents, because this comes up, I think, every presentation that I do. So let's talk about the procedure, how we help people with credit, but also just, and I'm just going to use an example. Let's say we get someone that calls in and they got a 570 credit score, and they're like, hey, I'd like to, and we're not going to talk about the grant, but let's just say they want to get a grant and they need at least a 620 or 640 to get that. So, I talk to them for a couple of minutes and I'll say, hey, let me give you to my loan partner, Renee, and she's going to take it from there. Renee, how does that work out?
Usually people are very receptive to it. And again, I immediately just reassure them that they're not alone, and that with my guidance, that I can tell them what to do. And I'm certainly not a credit repair person by any means, but I've looked at credit reports for actually probably 30 years now, because I've worked at the credit bureau before and worked in collections. So, I know. So, yeah. I know how to help people or guide people or tell them tips to get their scores up, and so that's the first thing we do. I immediately send them their plan of action and tell them to review that and their credit report and call me back, and we can go over it, or I can answer any questions, or just whatever they need to face those challenges and fix those, and not to be ashamed or embarrassed, because it's just a part of life, and usually once they get comfortable, they're good,
Right. That's the one thing when I think about setbacks, or we flash back to 2008 when, someone had a bankruptcy or a short sale or foreclosure. What's another one? Divorce. These are all setbacks, and how do you bounce back from that? You can't run from it. You got to face it, right? And you got to look at it. You look and see where you're at, and then you make steps from it. I used to hear this all the time. Rome wasn't built in a day, right?
That's right.
You mess up your credit right away, but rebuilding it takes a little time. But sometimes it doesn't take as long. It's so weird. And I'm going to speak to bankruptcies just for a second, and we could talk about divorce and all those things, those setbacks. But when I see someone that's filed a bankruptcy and it's been 3, 5, 6, 7 years later, and sometimes you have two types of people. You have people that go right back into the same issue. It wasn't a one-time thing. They have debt, and then you have people that are so afraid that they have no credit, right? And you're like, okay, it's okay. So how do you bounce back from that? And one is establish a new credit, but a lot of times they think their credit's messed up, and it's not. So that we get that too. And also taking care of your credit can help you on a conventional loan. I mean, you could be right at a 700 or 720, and you happen to get to a 740, which Renee looks at and say, oh man, if you pay down this account, you'll be up to a 740 in no time, and then you get a better rate.
Mm-hmm. Yep.
So, I mean, that those things I think are tools that we can use to help you. If you're afraid to call us, we love to talk to you about your credit and stuff like that. And I'm going to answer this question here. You can go to myfico.com. It's very accurate. It's very similar to Lender's Report. There's like 13, 16 different reports on there. Look at the mortgage reports. It gives you an idea. If you want to go over, if you want us to go over that with you, we can go over it with you as well. But you got to start somewhere. This is the best time to start. So I always mess up how you say it. Damon, right? Yeah. Planning out a healthy budget or the fear of a good credit score. So, like the budget part, I think is important. We always have to come back and tighten things sometimes too. So we talk about the first part in buying a home is the budget piece. What I would do first, and you can Google, there's so many apps. You guys have so much technology now. What we started. But you could get an Excel spreadsheet, and I like to look at, look, we're doing ours tomorrow. I usually do it at the end of the month, days, and we look and see, okay, what bills are we have to pay? You look at it, your routine, and then you say, okay, these are the bills I have to pay. I'm going to challenge you guys to do something different. And then Renee, I think you know where I'm going with this because it's hard to do this, right? There's a thing called, and we're about to get off topic a little bit, but this is something to talk about. There's a thing called compounded interest. Okay, the credit card companies, the mortgage companies, that's us, right? We understand that very well, because you pay 2-3 times for your house when you buy a house. It's still better than paying rent. Okay, 100% better than paying rent. The thing what I'm saying is when we come up with a budget, I like to think of the thing of making sure you pay yourself, even if it's a little bit, even if it's $50 or $100 a month, because what that is, then you'll start accumulating interest there. And I know what most people are going to say, I can't afford to do it, but in some cases, you're paying a credit card or another bill that is charging you interest, and they're going to keep compounding interest. And I'm not telling you to go late on any bills, but I'm saying even if it's a small amount, if it's $10, right, that will begin to build for your down payment or other budget. You'll see your assets grow. That's the same thing when it comes to interest. When you're paying this interest 20%, some of these credit cards are higher than that, right?
Oh yeah,
25%. Some of them have 0% for the first 6 months, and then it goes up. So that's the part you got to first lay out every bill, and we can get a financial planner on here to talk to you about this, and then look and see what your income is after taxes. That gets his hand on it, and then you kind of come with a budget. Which brings me into the point of debt ratio and buying a home. Renee,
yes,
somebody qualifying, and we like to use the term they hit debt ratio. If somebody has a 50% debt ratio, what is that? If look, I say they make $5,000 a month. So 50% debt ratio is what?
$2,500 a month.
Right. See, I'm not the only one that can do math here. So that's half. Here's the problem that I have when we're talking about budgeting for people and thinking about going to a house, is that $2,500 is before Uncle Sam takes his money. So although we can push you to help you, when we're helping you buy a home, we want you to be able to keep that home. Okay, so how we look at things, and so that might be, so that's why we like to ask the question is, what do you feel comfortable making a payment? And that helps you out. I'm glad you said this with the budget. That helps you out because once you list all those bills, you kind of realize, hey, I've been paying $1,500 a month in rent. I could probably go up to $2,000, but you want to look at the budget and see, and we help you do that too. We look at the numbers and stuff with you, make sure it makes sense. You want to add anything to that, Renee?
No, I completely agree because I've seen so many people want to so badly to buy a home in a certain price range that is what I think is a little above what they should purchase, and then they have issues, I mean, you get house poor, and as well as I do, when you have kids, things happen, life happens, there's always unexpected debts and bills, that come in, and we don't want to see anybody, overdo themselves and not be able to live and then have lates or lose their home. Our goal is to get people in homes, but our goal is also to keep them in those homes and, so that they're in a price range, a payment range where they're comfortable and they can still live,
Yes. And you want to live good, right? I love that you said house poor. You want to be able to go to a movie. I mean, as crazy that might sound, I've been in it so long. I remember when people couldn't afford to go to a movie, right? You know, something that's, I don't know how much they cost nowadays because I go to the matinees all the time. So when I go,
They're very expensive now.
yeah, I mean, when I go, usually it's about, for a family of 5, costs us like $60-$70, something like that. Popcorn, maybe less, but I bet you if you go at night, it's probably double that. But
Yep.
so I mean, we're going to show you how you can build wealth in a home too, what that looks like. We talked about credit. In going back to the second part of Damon's question, he says planning out a healthy budget. So I would say a healthy budget, really, everybody's going to be in a different situation. There's income that we may not count, right? Because your spouse doesn't want to go alone, but there's an extra couple thousand there. Or there's child support that you don't want to count, and that's an extra $1,000 there. Or there's a Lyft, or what is it called? Uber that you're doing. So you want to count. So we want to make sure that on the income you're going to use, the qualifying income, right, that you qualify. But then there's going to, because it's going to vary. So we can say, hey, you make $5,000 a month, you shouldn't pay more than $2,000 or $1,500 or $2,500. But that's really going to depend on your situation. Each situation is different. There's no two people the same. We all got different DNA. So I don't know if you want to add anything to that, but I think you have to come out with a budget and look at what's comfortable for you. We'll assist you with that, but it's got to make sense.
Exactly. That's it. It's got to make sense.
I mean, that varies too, because I mean, I've heard different things. A perfect credit score is 850. I have never seen someone with it. I've seen as high as 825, somewhere around there. We love it when we see some of those sometimes. I mean, we go down to, I would say 580, but I think we go lower than that in certain cases, right?
540 on FHA with 10% down.
Yeah, that's right. 540 with 10% down, and then 540 for VA loans too.
Yep.
It's got to make sense, guys. So if you're behind on your car right now, the lender, they really care about, do you have the ability to repay us? Let's just be honest about that.
Right.
We care about your credit, but we're not in the business of repossessing homes. Honestly, we're not. We want to, we got to make some interest, but we're in the business of helping people get into homes, help them build wealth, but not put them in a bad situation.
Right.
Okay. We got another question. That's right. If it don't make dollars, it don't make sense, right? 100% agree. Yeah, that's the key. And yeah, we got a decent amount of people here starting. But you guys gotta, give me some questions in here. Renee, anything you want to add before I go on to our next thing? We talked about credit, and then I want to kind of talk about the other reason, which is the funds, the down payment.
Yes.
Programs we can share a couple of programs that's available in Illinois and Alabama and Indiana. We do loans in 49 states, but I'm licensed in 5, and Renee is licensed in how many now, Renee?
2 right now.
2. Okay, cool. So no problem, Teresa. I appreciate that. So when we talk about grants, and man, I can tell you, drinking from a water hose, and I think I've said that a couple times. When we went through this merger, which was a great merger, right? We went from a top 40 mortgage company to top 10. And I saw this thing that Guild had 670 odd first time buyer programs, and almost like, what? We're not going to tell you about all 670. We'll be on here for 5 days straight. But Renee, I'll let you read a little bit. What do you, as far as some of the grants, and I mean, there's so many.
Yeah, I was going to say, it's there's no way anybody can know them all. That's why we sometimes take the time to have to do some research and find something that fits the criteria of that particular customer that we're looking for help with. And there's so many different criterias, and that's why we have to, know everything, and then we have to dig and search and see if there's anything that fits, that borrower fits into as far as a grant program.
Right.
So, and it's not always an option, but if it is, we will let you know it is, and we'll get you approved for it if we can find something that fits your needs.
Yeah. I mean, Illinois, a lot of people know about IDA, and we got a grant in Indiana as well. I'm sure there's grants in Alabama.
We have one very similar to IDA, Alabama Housing Finance Authority.
Yep.
Very similar. Yeah.
Yep. And so, I mean, and again, sometimes it makes sense to do it. Sometimes it doesn't. It just really depends. I mean, in my opinion, if you need the money, then you figure out a way to go on the grant. But I do believe that more than likely you're going to refinance within a year, maybe sooner, a year and a half, because I think rates are going to come down. And then for those people that say, well, I'll just wait then, well, you're going to be dealing with more competition then.
Oh yeah.
Rates come down, more people are, so you buy now, refinance later. Or I heard one lender say this alone during I think it was like a year and a half ago that everybody started using it. So I'm gonna steal it from them. They said marry the house and date the rate. I was like,
Yes, I love that.
that's so cute. I was like, so that's not original on my part. I believe it. I can give you some original ones, but I thought that was so cute. And I'm like, all right, that makes sense. So you're marrying your house, you're building long-term wealth, which we're going to show you how that's done. And then you date the rate. So I'm going to show you the wealth building part shortly here. We talked a little bit about the grants. I mean, again, there's a lot of grants, guys. I'm not just shooting over that. There are grants where you can get, they're repayable after 5 years, or they're forgiven after 5 years, I should say. There's some that's over 10 years. There's some that you have to pay back, but they give you more money. So it depends on what you need and flexibility. Most of them are income-based driven, though. So you can't be over a certain amount of money. We had a client that called us, Renee, and don't say their name, that made close to 200 grand, and they wanted to know what they qualified for. And I'm like, listen, you're in the top 1%, and so grant money is not for you. You're gonna have to save up for your down payment. Okay, right. We bust that myth already. You don't need 20%. You can put 3% down if you're first time buyer conventional, or 3.5% going FHA is the normal. I mean, again, that's outside of the grants. As far as programs, so we don't skip past it, and then we're going to get to this wealth part on the stream, is that I like some of the buy down program. I think that's a really hot program that we have right now. With all the stuff we've been saying right now, knowing that I feel like, and I believe you feel like, that rates are going to come down within a year or so, right? We don't know what they're going to come down, but we know they're going to come down. You get a temp buy down. There's programs that we buy down the rate for you, okay, for a year. And then there's programs where you can have the sellers give you credit. Again, there is income qualification for those types of things. Renee, do you want to add on to that? So I don't want to dive into that.
Yeah, I mean, as far as the buy downs, we've seen a lot of activity here and probably there as well, but especially with builders, new construction, they're using that as an incentive to bring people in, to buy their homes. And if they're buying down the rate, let's just say if the rate on the main program is 7% right now, they're doing buy downs for clients, which a 2-1 buy down or a 3-2-1, a 3-1 buy down, where you can, you would have 5 the first year, 6 the second year, 7 the third year, and forward. If you don't refinance, it would be still 7 would be your max. But we're just seeing a lot of new construction, a lot of builders drawing in clients by using that program. And it has helped around here for sure tremendously with our builders moving some of their homes.
Yeah, and here's what's cool about this, and I'm glad you brought that up. So the one you just explained is a 2-1, so 5, 6, and 7. So here's the deal. We just said we think rates are going to come down within a year. The reason that, and let's just say on a $400,000 house, let's say that costs you about, let's just make up a number, $13,000. And I might be right around accurate on that too, because we did one not that long ago. But the builder gives a $13,000 credit to buy down their rate. What's cool about doing a buy down compared to a permanent buy down? So let's just make this up. Let's say the buy down is at 7, and let's say a permanent buy down is like 6.5, same money, or 6.3. The cool thing about the permanent buy down, the 2-1 buy down or 3-2-1 buy down, is the money that the difference in those payments, okay, that goes in escrow, guys. So if you refinance, let's say in a year, and there's still $6,000 in that escrow, that goes as a principal reduction. That's a lot of things people don't know. So if you do a permanent buy down and you went to 6.5, right, you lost that money. Because if rates come down to 5.5 per se, I think some people are saying in the high 4s, low 5. I think it's going to be in the low 5s, in my opinion. I could be wrong within a year or so. So you're missing out on money. So a temporary buy down allows you to keep the money and have a security of a lower rate for that shorter period. It's a really cool program, guys, and you just got to negotiate it in your contract. And it makes it more affordable. Now you have to qualify at the higher rate, where the rates are at. But at the end of the day, it makes it more affordable until you get closer to where you want to be as far as rates are concerned. Yep. Any add-ons, boss?
I believe that's it.
Okay, cool. So we got the wealth part, and my buddy stepped out for a minute, and I see the screen is up. I want to hit that. Show it. See if you can hit that for us a little bit. I want us to have a little fun here. Oh, there you go. Can you make that a little bit larger for me? Perfect. Oh, no, we're good. We're good. Okay, so here's what we're going to do. Hit the button where it says purchase price. Oh, no, you know what? Yeah, hit purchase price. Yeah, hit that. It's letting it do it. Okay, here, do me a favor. Just put, I'm going to use the code. Let's use 60451. We'll use that one. Well, no, 60423. 60423. Let's use that one. We're just going to make up the number. I believe that's Frank. Will. Should be Will at the bottom. Okay, and then we're going to do, because we've done a click count, let's do a purchase price of about 500,000. I'm going to show you guys. We're going to have some fun. Okay, this is your move up home. We're having some fun. And then hit the green arrow. Perfect. Okay, so I want you to come down a little bit to the side. So that button where it says renting, go up and hit that arrow for me. This is what I love. I love doing this. All right, so the average home in this area, so this is called Moody Analytics, and this is MBS Highway, by the way, guys. This is one of my favorite tools to use. The average home that's $500,000 is going for rent of $4,300 a month. Yeah, see that? $4,373. So what I'd like for you to do, boss, do me a favor, go over to it, like in the middle where it says estimated cash flow. Go down a little bit more. Just stop. Over to the right. Yeah, stay there. See where it says annual rent increase is 5.313%. So rents are going up higher, okay, than the house than mortgage appreciation. So rents are at 5%. So you're paying $4,300. But here's the cool thing, guys. So there's a lot of benefits for buying a home, but we're going to talk numbers only. So appreciation gain, that means the house goes up in value. So they're saying go down a little bit where it says 3.43% underneath that 107. Yeah, see that? I kind of hover over that so people see that. There you go, perfect. 3.43% is what they're saying appreciation is right now because of the market and the government enforced recession and trying to get inflation down, raising rates. But we're still doing well. It's 3.43%. I believe when the rates go down next year, that appreciation is going to go up to 5-7%. Then we have more people trying to buy a house. But let's look at long term. I'm a true believer in long term wealth, not short term. So the other benefit besides appreciation is amortization gain. Okay, so that means you're paying more towards principal. Renee, we're gonna have some fun. We're paying $3,000 a month for rent, so we're gonna say $4,000. I don't think people's paying into that, but $3,000 a month for rent, which is basically 42,000 a year. I think that's right? Yeah, 42,000 a year. So how much of that do you get back if you're paying rent?
Zero.
Zero. I don't care if the rate is 10%, you're getting zero. But amortization gain over a 9-year period, we're looking at about $57,000. The cash flow difference, right, when you're buying a home compared to renting is $88,000. So, boss, can you go down a little bit for me? And I want to talk about this right here before you hit show results. We're also taking into consideration the cost to sell your house in 9 years. We're not telling you to, you're going to move up. We're going to say you're going to live in that house for 9 years. The cost to sell your house, we're going to say it costs you 6%, which is $40,000. You see it's negative, it's red there, $40,000. Okay, and then we're going to hit show results. Watch this. Okay, in 9 years, what does that number say? I mean, this is like, wow, amazing, right? $294,000, almost $300,000. This is how you build wealth in the long term. You pay your mortgage payment, not paying rent. Again, this is $500,000, so I get that. You pay your mortgage payment. So in 9 years, they're saying it's worth $800,000, basically, right? Based off the things you've done, or maybe it's worth $750,000, but you paid down principal, things like those. All that being said, even if it's off $500,000, you're still better off than throwing rent. And I think this is pretty good, guys. So go down a little bit for me, if you don't mind. Okay. Actually, go back up for me. Sorry, I apologize. I want to do one in Alabama. I want to have some fun with the name. Okay, so let's change it to Will County. Give me a county in Alabama.
Autauga. A-U-T-A-U-G-A.
A-U.
A-U-T.
T.
Mm-hmm.
What else?
A-U.
T.
No, again, another A-U.
Oh, A-U. Another A-U.
G-A.
G-A. And then we're going to say Alabama. You got to put a comma there, boss. There we go. I can't see. It's there. It was like one of the first ones. Autauga, Alabama. That's the second one. See it? Yep, hit that one. All right. So what's the price range over there, Renee? Give me a
I would say 250.
Let's do 250. Okay. Then let's hit that green button. We're gonna have some fun here again. All right. So the average rent is a little under $2,000. It says 1784. Okay. And then we're going down there saying annual rent increase is only 3%. So they're not charging you guys as much there. You got a little bit easier on that. Okay. But appreciation is gaining. It's more appreciation. There's 3.52%.
Mm-hmm.
Okay, go down for me. So what they're saying in 9 years, you're going to get about 91,000, and the amortization, the amount of principal you pay down is going to be 28,000. You know what this number does not include, and I forgot about it, is you get to write off the property taxes.
That's right. And that's all you can write off just about unless you're self-employed.
Right. Yeah. Well, unless you know, I think they passed a law a couple years ago that if it's over 10,000, you can only write off up to 10 grand. Only Illinois, New Jersey, California, and maybe a couple other states. New York, worry about that.
Yeah, we don't worry about that here.
Yeah, go down. Yeah, we're only states they rip us off of. Go down a little bit for me, boss, and then hit show results. Oh, it's already doing. It did the results automatically, I think. Yep, it did. So that's about 121,000 in 9 years. Now, so this was not as large, right? Because we don't have a $500,000, but still, in 9 years, you basically set yourself up for 121,000. Let's say it's off by 20. That's still about 100,000, and it's still taking consideration that it costs you $20,000 to sell your house, right? Yep. So this is one of the things I like to look at when you talk about building wealth. Renee, anything else you want to add on there?
No, I don't believe so. Like you said, the interest rate on rent is 100%. So I saw a meme that said that earlier, and I'm like, well, yeah, that's true.
Yep.
It's 100. You know, you don't benefit anything from it.
No, you don't. It doesn't.
Having a place to live.
Right. I mean, there's so many things you can do with this tool. If you want to buy a second home, if you want to buy an investment property, that's the thing. In looking at this, right? You know, over 10 years, it's 142,000. Imagine if you had, you know, a home for each kid, you know, or you got a couple properties. This is another way you can make up for if you didn't save as much, right? You talk to a financial planner, but let's just say, hey, you like, I want to retire in 20 years. You buy yourself a couple properties, right? Put yourself together, and then you still got to save, put money in your 401k and investment. You have strategies, put stuff in long-term investments, but you can build wealth this way in a couple of different avenues. You know, and we're not talking about, again, it's not getting rich quick, guys. 3.5% is not a lot of appreciation. I can see if I was on here telling you you're going to have 20/20 every year when it's going up 20%, it's 8%. We're not now. If you get lucky and that happens, then great. But we're saying this is the long-term way you build wealth. Yeah, you're good. You're good. You can move it out. We're good. Thank you so much. So I hope that help some people out there. Yeah, you guys can rewatch this, but it's just another way of using this tool to help you build wealth and see how you can do. And it's planning. You know, so many different things we do in our lives, we don't always plan for it. And it's another way you can do that. I don't know if Darius is coming on. I did send him a text with that. So I said, look, we're going to get him a couple of minutes in there. But let's talk shop. Let's talk some more programs while we're waiting on him. Any questions? Have you guys any questions? I think I leave that open. Questions? Okay. So another hot program, and I mentioned this last time. This is one of our, I do want to talk VA for a second too. But one of the programs that we have is we call it our special program, our 1% down program. Oh, sorry, not 1% down, 1% buy down program. So basically, what we do with this program, we give up to $5,000 in down payment assistance, a conventional loan, okay, and we'll buy down your rate for 1 year, which goes along with the fact that Renee and I talking about that you can refinance within a year when rates come down. Really cool program, and we give you the payment protection. And Renee kind of talked about that a little bit. But it's actually a pretty cool program because you get the both the best of both worlds, right? You get a little rate the first year, and we're giving you 5 Gs, and you don't.
That's right.
You're not paying us back for that. Anything else you want to add, Renee? Well, we got a few minutes before our buddy comes on. Any program you think that we left off? We got a ton of them.
I was about to say, wow, we have a ton. I think you said you wanted to touch on VA a little bit.
Yeah, why not? Let's talk VA for a few minutes.
Yeah, we're always looking for ways to help our veterans as well, you know. So let's talk about that.
Yep. So VA, we got a lot of little nuggets to talk about that. First of all, if you're a veteran, thank you for your service. We appreciate you. How 100% financing without PMI, private mortgage insurance, or any MI for that matter, mortgage insurance. And they do charge you upfront funding fee, but in some cases you can get that waived if you had a disability through VA. So if you're a veteran, let's go ahead and start porting those VA questions. What's cool about our company too, we do allow for veterans to go down to 540 credit score, and that's a manual underwrite. So you got to have some good qualifications to get that approved. But we love helping our veterans out. And Renee, I'm going to let you kind of poke in and talk more about that.
Okay. Yes, I mean, like you said, we do go down to a 540, but like with any other program, I think a lot of people think just because if you have that minimum credit score, that you're eligible. And unfortunately, that doesn't necessarily mean that, but that's the first hurdle, And once you get that, we've got to look at your credit. We've got to see why it's where it is, and it could be things that happened 2 years ago and you just haven't built credit yet, good credit to offset the bad and pull your scores up. Or, you may be behind on your car payment for 90 days or different things. But just because you have the score doesn't necessarily mean you can get the loan. And it's not just automatic, just, because you're a veteran. But we're going to do everything in our power. If that loan can be made, we're going to make it, and if not, we're not just going to say, okay, well, we can't help you.
I like
we're
that.
going to say, well, oh yeah, never. That's my thing. That's always been my passion. I love to help people overcome challenges, and if they're willing to work on it for 3 months, 6 months, a year, I'm willing to work with them on it as well until they get where they need to be, and I always do that. I tell them,
you do. I love it. Can you stick around for a few minutes? We're going to bring in Darius for a second. We're going to bring on.
Yeah, sure.
Go ahead and bring in Darius, a special guest here. I don't know if you can hear us, all three of us good show. Why you got the spotlight on me? Yeah, let's have equal opportunity here. Hey, Darius, how you doing, boss?
Man, I'm making this thing do what it do. How are you guys?
Good,
awesome.
Good. I've got my loan partner Renee on here. She's from Sweet Home, Alabama.
Oh, Sweet Home,
Roll
Alabama.
Tide. Had to put that in there,
Yeah. That Roll Tide. Yeah. We've got my good friend Darius Brooks on as well, and glad to have him on. We got to keep our promise. And who in the back there put Go Cubs in? I'm from the South Side. We're Sox. I know we suck right now. I just noticed that. Yeah, I got to tease, but cool. Got Pastor Darius Brooks on here singing. He's going to give us a couple of words of wisdom here before this show is out, and then also he got to keep his promise on. He teased about getting one of his songs in. But before we jump in and do that, Darius, I want Renee to answer that question. Dave asked about what are the qualifications if you need that 540. So just if you can kind of touch base. And Dave's a dynamic agent for Century 21, so we want to give them information on the slides.
Certainly. As I said, the 540 is the first obstacle to overcome. So once you've got that, then we still have to, it's no different. We still have to look into the credit, what's caused it, debt to income ratio. The VA is a little more lenient than the other programs, as they should be, but again, it depends on why, and it depends on the why behind the why. You could have had life challenges, you could have been ill, you could have been fighting a disease for 2 years, you could have been overseas. There's just so many different things that could have happened, and basically what we do is we dig in and find the entire story.
Yep.
That's the only way we can help, is if we literally know the entire story, because then we can get everything together to paint the picture for the underwriter and get documentation to back everything up that makes sense, to see if we can get it approved. And that's
keyword she said,
we love
back
to do.
everything up that you said, because if you tell us something and it's not right, that can throw it off. I want to give these last minutes, and I want you to hang out, Renee. So whatever you feel led by Darius that take us there, I want you to talk a little bit about leadership and things of that nature, but just whatever's on your heart, and then also give us a good word of encouragement. And you got to give us a song too. So take it away.
Well,
And by the way, guys, we talking about home ownership, and you're like, why you got a pastor and a singer coming up? You know what? Because we're on a Christian radio station, but cool. You know what? Some of that stuff, and you being able to do things, you got to have your mind right, and having your mind right, he gonna fix you up for that.
That's right.
well, I think one of the misconceptions of church and the Bible and God is that a lot of people have turned it into a religious situation, and that's not what the Bible and God is about at all. The Word of God from Genesis to Revelation are about principle. And if you really read it and study it, everything in there is more about compassion, morals, integrity, character. From Genesis to Revelation, everything that's in there is about hope. It's about a way you can see things uniquely different, the way the world is operating, but it's been pushed as a religious thing, and that's another confusing area, because when you really look at religions, all of them, a religion is simply a group of people who believe what they believe. That's all religion is. It's a group of people who believe what they believe. It's just like Harold's Chicken, Kentucky Fried Chicken, Church's Chicken. It's just like a barbecue restaurant. They got some with sweet barbecue, some with sour barbecue. It's just like banks. There's some banks who care for people. There's some banks who don't care for people. So at the end of the day, institutions are simply people who believe what they believe. The Word of God is never based on what people believe. It's based on a truth. And compassion is who God is. And even though we sometimes act crazy, he has compassion on us. Although we do some of the most craziest, absurd things, his mercy and his grace follows us. If you think I'm joking, some of the most richest people at the end of their lives call on God. Some of the most poorest people call on God. Some of the most strongest people, when they get weak, call on God. At the end of the day, as quiet as it's kept, some of the movers and shakers, when they get in the car and when trouble comes and storm begins to rise, they don't call their attorney, because there's some judges can't do. There's some things some attorneys can't do. Some things we do in our lives, even that we've made wrong.
There's you bringing it. Hey, look, look, I'm gonna let you loose in a second, but I gotta laugh at Dave. You made me laugh. He's like, Harold's is good, but you gotta get to the right location.
What'd you say?
He said Harold's is good, but you gotta get to the right location.
Exactly my point.
There you go. That's a perfect. Yep.
Yeah, and watch this. And honestly, real talk, all jokes aside, when you really read and study, it's a heart matter. Watch this, for direction. That's all it is. I'm excited about teaching the way that you could look at things differently. The three institutions that have messed us up the most is church, home, and school. You'd be surprised the people, the children, the parents who have messed up their children's lives by trying to dictate to them and trying to share with them how they're supposed to live as if they are supposed to follow them. And that's not true at all. Children don't belong to their parents. They come through their parents. Creation belongs to God. That's why we outgrow them. That's why we outthink them. That's why my family's not supposed to be the way my mother and father chose their lives. And so when it's right, I often say that if you think education is expensive, you should try ignorance.
You said that last week too.
Yeah. But ignorance is a place where we all are. It's simply a place of information that's out there that we're not aware of. And that's why he says, my people are destroyed and perish for lack of knowledge. My point is, there's a hope. And God's definition of hope translates to strategic. Whenever you have a hope in God, there's a strategic plan to that. You don't just hope without a strategic plan to your hope. And it's the same thing with parents. When the Word of God says, honor thy mother and thy father, you got to rightly divide the word of truth. Honor means a valued respect. It means I teach like this. Honor in translation means a valued respect, or your parents have really done things for you that you could see that, wow, this is crazy, because you cannot honor your mother if she had her boyfriend fondle you. You know, I'm a straightforward pastor. I don't play. And at the end of the day, we need answers to our lives. We need answers to our direction. We need answers to the things that seems crazy. And that's what I like about the Word of God. When you're studying the Word of God, everything you need is in there, from love stories to murder. I often tell Grace Central, God is so amazing. He'll teach you how to do wrong right.
What did you say? Was that last part?
I said, God is so amazing. He'll teach you how to do wrong right.
You do you wrong. I ain't gonna let you break that down because we don't have enough time. Dave said something. He said, life is harder when you're dumb.
No, watch this. That's Hosea 4:6. My people are destroyed and perish for lack of knowledge.
Lack of knowledge,
yeah. Watch this. Knowledge is not power. Knowledge just keeps you from failing. Information is power. Yeah. So, but I got a saying, because my wife is looking at me, beckoning me, and so I got to get back on. I want to come out there with you to hang out, but I want to sing this song that's on my heart, and it goes like this. What do you do when you've done all you can, and it seems like it's never enough? Tell me, how do you smile when your heart has been broken and shame? What do you do when you've given your all and it seems like it's never enough? Listen, you just stand when there's nothing else to do. You just stand and watch the Lord see you through. After you've done all you can, you just stand. I want to leave that with somebody.
Awesome.
That when you get through standing after all that's been done, watch this. Standing means give time a chance, and time heals the wounded heart. There's everybody.
Say that one more time, Darius. I think you broke up for a second.
There's an opportunity for everybody who don't give up.
Amen.
Amen.
I appreciate you sharing a little bit of your voice, man. And you want to hear Darius? He's got some nice hits. Obviously, Your Will is a big one for President Obama, but I like the new version of
My mind get up.
Yes. Yeah, that's good.
That's awesome.
And go to YouTube and listen to My Mind's Made Up by Darius Brooks and the Tommy's Reunion. I believe it's 17 on Media Base right now.
We're gonna play it. We're gonna play it at the end there. We're gonna put it in. We got it set up. I'm gonna close out the show real quick. Look, I appreciate you for coming on and for loving on our people and just giving them a quick word. I like that you can do that and give them a little thought. And Renee, I appreciate you every day for helping us, create more home ownership. That's the thing, guys. You build wealth long term, and that's I tell people I don't have a get rich quick. I gotta build wealth long term. Now, God blesses you, opens you up, and blesses you indeed. Like Jabez, I'm all in. Let's do it. But this is wisdom that I'm giving you how to build wealth. And the last thing I'm gonna say on that, it breaks my heart so many times when I see my elders or that don't have any money, whether it's in retirement or they don't have a home. This is how you start long term to do things. So if you guys want to start with us, we'd love to hear from you. You can reach myself or Renee at 630-352-0629, 630-352-0629, or apply online at mytrustedprovider.com. That's mytrustedprovider.com. And don't forget, at Grace Central, there is preaching every Sunday, but they have a food bank where they're giving away food on Tuesdays and Wednesdays, right?
Yeah, and the $300 worth of food, not just peanut butter and crackers.
Wow.
Yeah. We give it to each
awesome.
$200 to $300 worth of food: eggs, milk, ham, chicken, jiffy.
Yeah, there's no reason for you to go hungry. You got some of this actually not just on Thanksgiving and Christmas or Easter. This is every day. Every week they do this.
Every Tuesday from 5 till 7, and on Wednesdays noon till 2 for seniors. And we serve 8 different townships in Westchester. We don't turn no one away. So if you know anybody who needs food, please send them. Go to gracecentral.net, check us out. And for all donations as well, gracecentral.net. We do not charge, we do not do it, and we turn no one away. And it's every week of the year.
I love that you do that, man. You got a big heart. I know God laid that on your heart, and I remember when you were setting all that stuff up years ago. That's awesome that you're still doing it. And I got to support.
Come out here one Tuesday, you said.
Well, that is incredible.
I am going to come see you. I'm going to come help you. I promise you I am going to set it up. You can hold me to that. My word is my bond. And we're going to play a song to close out, right?
Yeah.
Let's kick out. Let's get a little bit of that. I remember No, go ahead. Go. Kick it off.
Those that know this song, you can sing it with us. And you might not know what it is right now, but you'll know in a minute. Somewhere right around here. Listen.
Looking over my life, I see the road I've taken. I don't like it. Seems some things have got to be shaken. I checked it out. I've been in this thing too long. Gotta change my attitude. It's time to sing a new song. Yes, I made up my mind. I'm going in another direction. 'Cause if I don't, I'll end in destruction. I'll walk and I'll crawl. But this time, I'm gonna give my all. Please don't hinder me. I'm trying to make a change. I'm going all the way and I'm burning Jesus' name. Looking over my life, I see the road I've taken. I don't like it. Seems some things have got.
Views made on the preceding program are not those of WVTC Radio, iNetworks Communications, or their financial supporters.
Winning victory through Christ, WVTC Allsip Chicago, an iNetworks communication station.